In today's video, I want to take a look at some sentiment levels and kind of go over the difference between a market that is in a bear market and a market that's still in a bull. Now, keep in mind, I don't think gold is in a secular bear market, but I do think it's in a cyclical bear market as it moves down into that 8-year cycle low. So, this is intermediate sentiment, not short-term sentiment. Short-term sentiment is getting extremely bearish, and gold is going to be due for a bounce out of a daily cycle low any day. But intermediate term is a longer term sentiment level, and what we see here is the big run up from the bottom in 2018. We formed the right side of the cup and even broke out to new highs above 2,000, almost $2,100, and then we started the handle pattern. And what happened is during this rally, the right side of the cup, sentiment got bullish and it embedded in the bullish position. This is a sign of a asset that's in a bull market. But now we've transitioned into the declining phase of the 8-year cycle here, and you can see what's happening. Gold bugs are still, they've still got the memory of this move, and they're still expecting price to take off to the moon. And as I pointed out in previous videos, you've got countless analysts pushing this notion that any day now gold is going to go to the moon. As I've said, this is a great way to sell subscriptions. Gold bugs tend to be emotional, and they love to listen to people confirm their bias that gold is going to the moon. But it's not realistic analysis of the gold market. Until gold starts making a higher intermediate high, then all the signs are that we're in a cyclical bear market. I don't think a lot of damage is going to be done during this bear market, but I do believe it's going to go sideways long enough to get everybody to just give up. And you can see this is what happens to sentiment when you're on the slope of hope, so to speak. Gold bugs, they've still got the memory of this. They're still waiting for the next leg up. And so even though it's been a year and a half of gold going basically sideways to down, no higher intermediate highs, gold bugs just will not give up hope. Sentiment refuses to get pessimistic, and that's what we need to see. And I'm sure we will see it at the 8-year cycle low. But in our current market pattern of sideways, it's going to take a long time to get there. Now, if we were to get a big scary crash, say between now and the beginning of the year, and we get this sentiment down here into the extreme pessimism level, then maybe we're done with the handle and we're ready to go to the moon. But as it is right now, anyway, this is what the slope of hope looks like. If you look at the market rationally, it's making lower highs on an intermediate level, and it just continues to do so. This peak here was lower than this peak. This peak was not able to get above this one. Clearly, gold has completed an intermediate top here. This was also not able to get above this peak. But gold bugs just refuse to get bearish. They're waiting for that moonshot. It's going to happen any day now. The new COVID variant, whatever excuse people want to use for why they keep holding and hoping, whatever it is. Anyway, this is an example of a market that's in denial of what's happening. Now let me go to stocks. All right, so this is an intermediate term sentiment gauge for the stock market. And you can see the difference. Whereas gold investors refuse to get bearish even after a year and a half of the market declining and going sideways, that is not the case with the stock market. We've corrected for 7 days. And in 7 days, sentiment has completely collapsed. This is not what you would tend to see if stocks were starting a bear market. You would see traders would be stubbornly bullish like they are in the metals market, and sentiment would remain elevated even when it's clear that the market is rolling over. So and that's just not what we're seeing. We're seeing people still very quickly getting extremely pessimistic even during minor, very quick corrections. So this is a market that is still climbing the wall of worry. So no indication at all yet that the stock market has or is even ready to top. And then I'll end with a look at the Dow and the transports. Basically, this is a Dow theory chart. There's not even a non-confirmation at this point. As you can see here, the Dow made a higher high, and the transports confirmed by also making a higher high. I really doubt that we're going to end a long-term secular bull market without at least the transports or the industrials not confirming the other index. So no signs yet that we're on the slope of hope, starting a bear market in stocks. And all the signs are there that we're in at least a cyclical bear market in metals. So you're going to have to be patient in metals, and you want to continue to buy dips in the stock market.